Hey everybody, this is Brent from Wolf on Wall Street Trade, and we're going to look at the market for the week ending August 9th, 2019. Very busy week, a long week for me, so I'm going to keep this video pretty short. So just recapping real quick, we came into the week on Monday over here. China retaliated. Yuan is being devalued. So we had a 3% day down. That's about the equivalent of the last 5 days that had been down over here. It's actually a second leg down, and I'll show you that in a second. So here's the 50-day moving average. We ended just below it. And a couple things I want to point out real quick. We went long small caps here Monday afternoon and caught this 3-day move up. So this was the worst day of 2019. This was the best 3-day move in the last 2 months. And for those on YouTube, I'll just quickly recap why we had a good oversold condition here. Had some money coming into small caps Monday around 11 a.m. and we went in later in the afternoon and just held to this. Most of the position was taken off here on Thursday, and then a little bit more the end of it on Friday. So I can show you real quick on a measured move. I'll go to an intraday chart, maybe 60 minutes, something like that. Okay, and here is that previous week. So one thing to point out real quick, the S&P took out 8 weeks of gains as of Monday morning in 6 days. So it's the stairs up, the elevator down. Coming a little bit closer, let's go with the 15-minute chart. So here's Monday. This is how that last Friday left off on the 2nd. So we can put in a little trend line here. This looks like a little, very small flag. It's only 1 day, but you can get a measured move from it right here on a log chart. That's about it. And here it is. So this was one of the things that happened on Monday that suggested, okay, this move is probably getting exhausted. Hit the measured move in all the major averages. We also had a really extreme oversold condition. On Monday, you had like 30 of all 30 Dow stocks down, 95% of the S&P 500 stocks down, and CNBC is running their markets in turmoil special, which doesn't necessarily mean it's an oversold market, but you can just see how the psychology was moving there to a pretty deep oversold. So measured move target hit. In IWM, we saw some money coming in. Monday, right in this area for IWM, and got long right over here. Matter of fact, I have the trades marked on the chart here. So closed out a little bit of a longer term short position, not because I don't think the market can go down more, just because I thought we were going to get a good bounce. I want to take that money, flip it into the long side. Let me pull this down a little bit so you can see all these trades. So this was where I closed it and opened the long right here. Held it through Tuesday and Wednesday. We did not make a lower low on Wednesday, so there was no reason to sell it at that point. Had a very, very strong day on Thursday, and this is really what an oversold bounce should look like. They are spectacularly strong. So we took out about a quarter of the position here, and I sold some more here. So I was down to about a third, and then when IWM broke under 151 on Friday, I got out of the rest. One thing I want to point out real quick, if you look at the SPY, the QQQ, or the Dow, they kind of just ended the day like this. But if you look at IWM, it ended the day with something like another one of these small flags like we saw the previous Friday. So something like that. So the way IWM looks anyway, not the rest of the averages, but at least IWM, it looks like it could lose some more going into early next week. Maybe a pullback down here to like 148.25, something like that. Another reason I chose IWM small caps, which did outperform the rest of the market over here on Thursday, was also we saw some relative strength. So let me move this chart out a little bit. Here is the July range, a little scaled out. IWM not confirming, small caps not confirming. They tried to break out, failed breakout, fast reversal. And you can see the relative weakness here. So as we were coming into the week Monday over here, there was some relative strength building. Now that kind of crapped out on Thursday. See, it's not making a higher high, and it starts to break below this trend. And I mention this because small caps tend to lead the broader market, even on terms like relative strength like this. You know, see something like this. This is weakness. Here's some strength. And now it's kind of plopping back down on Friday. And if you look at the major averages on the week, the S&P 500 lost about 0.5%, NASDAQ about 0.6%, Dow about 0.75%, and then small caps, even though they outperformed here on Thursday, they actually ended the week down 1.3%. So we saw some relative weakness in small caps. As far as S&P sectors, it was 6 up, 5 down, so split on the week. But we can still get something from that. So the energy sector was the worst performing, down over 2%. And remember the downtrend that energy was already in. Here's when that June, July uptrend broke. So this was like the first warning that things were going sideways. energy sector moved into a downtrend. This to me looks really oversold when you break down below a downtrend channel, and then we kind of bounce back and usually kind of at least test this lower channel, sometimes bounce back into it. But the point is, the energy sector was by far the weakest, followed by financials down 1.5%. Out of the 6 sectors that were up, 4 of them were defensive or defensively oriented, so that's consumer staples, utilities, real estate, and healthcare. The best performing on the week was real estate. So again, real estate best performing. We had a long idea back here. It's still moving towards this target range at the top of this channel. So if you want to trail a stop, that's fine. But the point is that when we started to get these buy signals over in the real estate sector, it was suggesting that the market was getting more defensive and concerned before it broke down. In terms of relative weakness, transport's down 1.6%, the regional banks down 2.3%, and semiconductors were down 1.5%. And this is one of the areas you might want to watch into next week. It's growth sensitive, and specifically to the trade war, ended the week in a bear flag. So this is one you really want to keep an eye on. I do have one remaining longer term short position in semiconductors. So if we kind of get up towards the top of this flag, I will probably add to that. But this is a good area to watch for the broader market, because if it starts breaking down below this flag, you can pretty much expect that it's going to start leading the broader market lower. The bigger picture takeaway is that, yes, we did get a nice bounce, and you have to expect these. You have to expect strong moves like this when volatility is high. And we had a very, very strong day Thursday, but this is absolutely to be expected. See my post Thursday night, the daily wrap, down towards the bottom. I talk about this first and second leg moves down and how this one looks a lot like October of 2018. So one other thing to point out too is when we came into the week, here's Monday, here's Tuesday. This is an inside day. This suggests that downside momentum is waning, and that's a bullish candle inside this one. But on Friday, we had an inside day on the upside over here. So inside of Thursday's real body, which is the opposite signal. It suggests upside momentum is waning. And of course, it's right there at that 50-day moving average, where you should expect some kind of technical reaction or psychological reaction. I'm not going to go over that whole post I did on Thursday where I showed, what happened in October. But I'll show you real quick. It's very, very similar here. So I've rolled this chart back to December 2018, and this is kind of what I was getting into. Often with these sell-offs, you will get a first leg down and a second leg down, and that's actually right here. A first leg, a little consolidation right there, a second leg down, and then you have this bigger price pattern where it's one big leg down here, a consolidation, and another big leg down. So this is pretty much how markets tend to move when they're selling off. So we're going to take a closer look at this first leg down, and it came in 2 legs as well. Let me back the chart up just a little bit here and zoom in a little bit. So we had a first leg down, a consolidation right there. There was a small flag, a second leg down. So this is kind of similar to what the market looked like Tuesday of last week, where you had an inside day that I just showed you. Then you got a correction, so it looked like this. Very strong correction on the upside. And then something of not really an inside day, but that's a bearish candle that's suggesting it's hitting resistance up here at this 2820 level. And then the market made a second leg down to November. So again, let me back up this chart to where it ended right here, that bounce. And then let's take a look at the market right now. Remember, inside day here, kind of a little bearish candle after a very strong day or correction. And this is the market now. So leg down, inside day, correction, and another inside day, losing some momentum there. Where we are now, which is similar to this, yeah, we could absolutely get a second leg lower, and that's really what I'm leaning toward. It might look something, it just depends on where the consolidation ends, but let's say it was somewhere around here, and I'll put on like a 15-minute chart so we can draw some trend lines real quick. It's not a great area to draw a trend line, but if I had to right now, let's say we did something like this, or you could move it over to this week's low, and we had to come away with a measured move, we would take this big leg down right here all the way to the bottom, first and second leg. Let me move this up a little bit. So yeah, roughly about there, and then we just move it to where the trend actually breaks from the consolidation. So that would give us a downside target somewhere in here around 2735, 2740 area, which would be testing that June low. So I'll be looking to reload some short positions, but it just depends on how the market develops. There's a lot of things to be watching. Friday afternoon, I put out a post on 3 different currencies you absolutely should be watching because they have been leading the market and they tend to lead the market. The US dollar versus the Japanese yen, the Australian dollar versus the US dollar, and the US dollar versus the Chinese yuan. As far as how far this bounce could go, I have a few trend lines that I've been watching. So 2900, here's 2914, a lot of reactions there. And then somewhere in this area about 2950. But then there's this trend line over here. You can see it better on like an intraday chart or 60-minute chart. Let's go to a 15-minute actually. So it's coming from here. And that would be up around 2980, 2985. I think by the time prices got there, it'd be about 2980. I'm not going to get too deep into this. This move over the last 2 weeks or so in the 10-year yield has been absolutely epic. So since the FOMC, since the Fed first cut rates for the first time since 2008, down 25 basis points, the 10-year yield has lost 30 basis points, okay? And just to give you some idea of like the 6-day move as of Wednesday here, let me pull this up and I'll show you. We'll go to a 6-day chart. So there's the move. This is the percent change. Is really not the right indicator to use on yields, but just to give you some idea of how epic this is, I'm going out to back here in 1986. I mean, look at this move. This is the bond market absolutely screaming that we are not in the clear as far as stocks go. Just a week or so after the Fed cut rates, that the Fed is already behind the curve again because of what's happened since then. So the market, the bond market, is pricing in lower growth, lower rates, and the market may just continue to sell off until the September FOMC or until the Fed comes out and says to the market or hints to the market that yes, we will cut rates again in September. This plunge in yields is absolutely epic, and it is the bond market screaming that we are far, far from out of the woods here with the stock market, with the economy. And then we have this really big broadening top pattern that has been taking shape since basically January of 2018. And, you know, look where the market turned around, right at this upper trend line. So I'm going to leave it off at that, and we'll see how things develop next week and where opportunities are. So I'll see everybody on Monday morning. Enjoy the rest of your weekend.